So we're looking at the toolbox of a successful stock investor. Right inside the toolbox, we've got 3 tools. The first, the average true range. The second, Bollinger Bands. And the third, support or resistance lines. We'll take them one after the other. Who has an idea what range is mathematically? Range. Okay. The high and low. Beautiful. So range gives us the difference between the high and the low. So if we've got 6 figures, maybe 1, 2, 3, 4, 5. The lowest being 1 and the highest, I'm trying to show you here, using the average true range. So if we check the range for the stock yesterday, that's a wide range and the stock has a low value. So you're looking at the stock's price in comparison with the range that it moves on the average. When you can get a stock that is priced cheap and moves a wide range, those are the kind of stocks you want to have in your portfolio. Meaning your money can buy you many more units of the stock, but they offer you the possibility of doing a wide range. In a sense, when you look at it, it looks like what you would call price-earning ratio. The price, the stock price, and the earning, in this case, is determined by the range of the stock. So when you get the value and it's low, look. When a stock is oversold, it is advisable to buy. Okay, sorry. Just move ahead. After the Bollinger Bands, you'll see support and resistance. I think I should take this first and then we come back to Bollinger Bands.
How does that reduce your risk? You know it's already oversold. Yes, it has a support benchmark, but it's oversold, which means that the tendency for sales, traders leaving that stock at that point is high. And this one is saying we should buy at support level. How does that prevent the break
Of the support. Yes. I told you at support levels, price will either. How do you prevent a bounce or a break in the market? Support it with your money. That's the only way you can be sure you are preventing it. Price will either bounce or break. But if it's breaking, you know where next to go to and how soon you can come out. All it will take you will be from the support to the lowest price within the 5 candles. Out of the 5 candles, remember there's a third one that is lower than 2 to the left, 2 to the right. Okay? So if price is breaking, once you see a close below the lowest price out of the 5 candles, it has successfully broken that support level. Okay? And what should you do? Exit the stock for the small loss. Wait to buy again at a lower level. I like to do it that way. I like to buy at such levels and not at a level like this where there is no support. If you have a 3-year-old child, as daddy is coming into the house, the child just starts crying. Mary, what is wrong? Say, Uncle, this pushed me. And nobody pushed the child. That cry is not a real cry. It did not hit anything that should make it turn. But when price hits a support level, the next candle closes bullish. It has found what? Demand. So when it hits a support level, you begin to watch for bullish evidence. What will be the signs of bullish evidence? 1, a bullish candle body. A candlestick that closes higher than the opening price. That's one evidence of buying. Another evidence will be that price will not make a new low. Price failed to make a new low. That means they are supporting the price. That's another evidence of buyers stepping in. The third evidence will be that price makes a new high compared to the previous candle. Did we get the three things? The first one is that price closes with a bullish body. That is the closing price compared to the opening price. The closing price will be higher. Now remember, in our stock exchange market here, we only buy. We don't do the selling. Your selling is to close the deal, right? To close the transaction, okay? In the foreign exchange market, we both buy and sell, and you can make money either way, okay? But I'm taking just buy in this case. When you buy, it's like watching paint dry. You're already inside. Little quantity. Then you see the first day close with a bullish body. It's buying evidence. It's evidence of buyers in the market. The next day makes a new high. It's evidence of buyers in the market. Price fails to make a new low. Has not made a new low for the past 3 days. It's evidence of buying. Those are the three evidences on the price chart that buying is taking place. Failure to make a new low, the ability of the candle to make a new high, and then the ability of the candle to close with a bullish body. Three evidences of buying activities in the market. So I gave something simple on that third bullet point. I said when a stock is oversold, it is advisable to buy from support levels. How do we know when the stock is oversold? People use different indicators to check that. Remember, I'm showing you just technical analysis. How do you know when the stock is oversold? Well, just before we go there, if the stock is oversold and you seek to buy, then what should you seek to do when the stock is overbought and is approaching resistance? Which is the opposite of this third one. Now, when a stock is overbought and it is approaching resistance, what should you do? You should close your trades and hold cash at resistance levels when it is overbought. Okay? So we seek to buy when it's oversold from support levels, and then to begin to exit, whether partially or totally, as it approaches resistance levels in an overbought area, begin to offload your stocks. Well, that's a chart showing support on FBNH. This is a close. This is a bearish candle, right? So the close is where? Down. This is a bullish candle. The close is where? Up. So this candle close, it's lower than 1, 2. Right? It is also lower than 1, 2. Okay? After this second day, this place became support. Okay, so if we put a horizontal line here, until the next time price came to it, it is a support level that you could look at and say, I could buy from here. But watch this. Sorry, maybe I can use this. I'm trying to project this line into the future. Watch it. This is the support line. Okay? And then price went this way, almost touching it here, and then here it broke through it. All right? Now I advised you to buy where? At such levels, support levels. So we broke through it here. What happened? Watch this line. Did we come back to test it? Before you can think of further selling. So even if you bought at a support level, they will always tell you the principle of support becoming resistance. When a support becomes broken, it will become resistance. Price will come back to retest it. So even if you had said, I don't want to exit for a loss here, watch this. Closing price lower than the closing price of 1, 2 to the left. Closing price lower than 1, 2. That's a support. What happened the next time price came to it? It's picking up. Why from there? Why did it turn from there? Why did they choose to buy from there? It's some of the little secrets in the market. It took me almost 6 years of staring at the charts. And that day I just saw it. I said, this is where price turns from. They work. So support here. I told you one of the first signs of buying is what? You could see a bullish body. Price will fail to make a new low. So here we had a bullish body. That's one sign. 2, this low compared to this one. Did it make a new low? No. Shows that somebody is buying somewhere. This high compared to this one. Is it higher? They are buying. That's the first thing you will see on any time frame, whether it's daily, whether it's weekly, to know that buying activity is going on. Price gapped, and then again it gapped. Close to the bearish body, warning signal, number 1. Doesn't mean you should jump out anyway. Price makes a new low compared to the previous candle. Did it make a new high? No. This is lower than this. So bearish body, new low, failure to make a new high. Hey, bros, get out of that stock quickly and go and look for some other place to buy from again. So we'll go and be looking for support. Then he tried to do a support here. And I showed you the next time price broke through it. It came back. And then again it's buying. So we've got another resistance here on LBNH. Which if it breaks, if it takes this out, the next level is here, 7 naira. Can we see how to draw the levels? Just look for a closing price that is higher than 1, 2 to the left, 1, 2 to the right. This is resistance. And it's around where? 7 naira. The resistance is like a ceiling. If I throw a ball up and it hits the ceiling, what should happen to the ball when it hits the ceiling, when it makes contact? It should come down. The support is like a floor. If I bounce a lawn tennis ball on the floor, when it makes contact with the floor, what should happen? It should bounce up. So let's imagine this is the first resistance, in this case here, our ceiling. But we've got another floor, another story on this building, okay? If I throw the ball up and the ball is able to break through this resistance, what should make it stop? What should be the next thing that should make it stop? The next ceiling, right? That's the next resistance. So if price is able to break this resistance here, the next place I would expect it to stop will be at 7 naira. You will see how we can make our price projections. So as it begins to approach 7 naira, begin to offload some. It could break it. Begin to offload some. So we just picked support and then see it bounced. I didn't just pick it because this one worked perfectly. Even if the level fails, price will usually come back to retest it before you will see a sell-off. Now, look at this place where we had this low, and then compare it with this place where we have this low. Which side is lower? This is lower. So if I put a plank like this, a line like this, and extrapolate it into the future, forming a trend line, what does that show you? it's rising. So if I could move that same line and move it up to this high, I'm trying to show you too many things so you don't get confused, but I'm just showing you some things. Now there's a differential in head. This is a low, this is a higher low. If I connect a line, a trend line from here to here, I'm projecting to the future. And I want to make it become an equidistant channel. From first principles, what to do is to move the line and take it to the high, which is the amplitude between here and here. What's the highest price? Here. In between here and here. Right? So if I move this trend line and I put it up here, I would have an equidistant channel. When price begins to approach the top, that's the line I moved from here to this place. When it begins to approach it, then we can start getting ready to sell the stock. That's to close our buy. It's simple.
What's the connection between those candlesticks and the line that's you are drawing?
This line, this is a support.
What you touch, that's the resistance.
The resistance 7.
No, on the right.
This one.
Line, yes.
Okay, yes, this close, the closing price here is higher than 1, 2. It also is higher than 1, 2. And that is the definition for resistance. So put horizontal lines at such levels. Anytime you notice from maybe your newspaper, you check price every day and you say, 60 naira. Yesterday was 59. The other day was 57. It was rising. After the 60, you now saw 59, then 56. That's a resistance. So just mark 60. The next time price comes there, the possibility will be that it will begin to sell from there. You'll find many of them, especially when they've not been tested since it was formed. When this one was formed, it was support until it got formed as support here. That's 2 days after, Abi. So 1, 2, 3, 4, 5, 6, 7 days. Price didn't come back to it. It remained support, a place to buy from. And then finally, price broke through it.